Investors and traders, welcome to the channel. Market Chart Dependent. Today is 3rd of July 2024. I hope everyone is having a great day. For my subscribers from United States, wishing you guys a very happy Independence Day, 4th of July. And this is going to be a little shorter video. I will be just mainly focusing on the US dollar and the bond markets, and we'll take a brief look at some of the other markets. As always, this video is for educational purposes only, and it's not a financial advice. We are taking a look at the daily chart of the US dollar. US dollar had a fair amount of weakness come into it today, and what we are looking at is this market finding a quite a lot of resistance from the 105.78 level, that is the 78.6% retracement. And this is what we were discussing, because we had two kind of potential scenarios. We had a possibility, which I'll show you on the weekly chart here, that we might be in this red ABCD higher, but that all really dependent upon this 105, 80, 78, 80 level, and then of course 107 breaking to the upside. But what the market seems to be doing is, especially today, earlier in the morning, there was a fair amount of selling pressure that came into this market. Now the market did not close at its lows. I think some profit taking happened, perhaps because we approach a longer weekend. Although currencies markets in other part of the world will remain open, but we saw some amount of selling come into this market, which also helped some other markets, such as the gold market and the silver market. We'll take a look at those in a moment. But the really interesting thing is in the US Treasuries. So we'll start by taking a look at the shorter end of the curve. So this is the 2-year Treasury note. And here we see that this market has been consolidating at the 4.7% level, which is the 30.2% retracement. And there was a fair amount of actually pressure come in this market as well. And we have seen the yields move lower. Now, we had some economic data come out, and of course we had the FOMC minutes come out, where the Fed kind of reiterated, saying that they need to see more data. But yesterday the chairman Powell was also on a news panel, and he was talking about, or did sound a bit more dovish, where he was looking for the core PCE inflation levels that they take a look at, or prefer that measure to be in the range of 2.5% to 2% range, for them to move with their first rate cut, kind of that sort of scenario that he was talking about. So what the market, it seems to be pricing in, is that although in their meeting last month, they had mentioned a rate cut to come later on, perhaps after the U.S. elections, but the market is kind of anticipating that perhaps the first rate cut could come before the election, so it could in fact come a little bit early in September. So that in fact put a pressure on the yields. The yields moved lower. We saw the dollar move lower as well, and this is the kind of thing the market is actually expecting a rate cut to come in, the first one to come in a little bit earlier, and that is putting the pressure on the yields to the downside, and that also helped the stocks. Now, taking a look at this on the longer terms, we will start by taking a look at the 10-year Treasury note. You can see that the 10-year Treasury note actually bounced back up after having this sell-off. When we had this sell-off last Friday, what we were talking about was to see, it's more visible on the 30-year Treasury note. So actually, I'll just move to the Treasury note. Here we go. This is the 30-year Treasury note. When this sell-off happened on last Friday, in the weekend review, what we spoke about was we had to wait and see what the follow-through would be like. And the reason was that we have had this kind of a sell-off before as well, on the 7th of June, and the next trading day, Monday. So it was also Friday, and I'm not sure whether it was the same economic data. It might have been, not really sure. I don't think so. And the 10th of June, we had a negative bar, but it was reversed. So this is the kind of thing we were looking at, and this is what we got as well today. With well, not today, but Tuesday, we did not see a follow through. Another reason is that we were really at a pretty good support level. If you just look at this trend line, and then we had some key Fibonacci retracement coming around as well. So the market had actually sold right in the 61.8% retracement, and I believe this is the 78.6%. Let me double check this. There we go. So we were right into that zone of 61.8% and 78.6%. And so far, this support has actually held along with this trend line. So this actually puts it puts us back into this belief that we actually might be in this CD like higher, but it's not gonna be a very um, straightforward move because market is really sensitive to any inflation related data that comes out, and we see really sharp declines. But then after 2 days of decline, we see that downward pressure actually dissipate. This is what we have seen this time, and it looks like the market is now recovering, and will try to attempt 118.22, where we have the 20-day period moving average as well. Now if we take a look at the TLT, which is the ETF of 20 plus treasury notes and bonds, excuse me, a similar pattern right at the trend line. And I'm not going to draw the retracement, Fibonacci retracement, but it's a very similar pattern to 30-year treasury notes, because it's 20 plus year maturity of the treasury bonds in this ETF. So looks like we are getting back into this CD leg, and what this was a not a very nice looking retracement, and was rather pretty sudden as well, in the sense that it was a pretty strong move to the downside, but looks like we are not getting a follow through. So this is a really key to watch, because the treasury markets, if the yields begins to go lower, this is gonna help the appetite for risky assets as stocks, also help real estate, and will also help all these related risky assets. Now, let's take a quick look at the gold market. Here we go. So gold, as I mentioned, that dollar took a beating, and it looks like the way the dollar is, that if we begin to get a follow through, we could see a rapid move in the dollar to the downside. So the gold was supported here. This is the COMEX gold. This is not the spot gold. So if you are looking at the spot gold, your price levels will be different. This is the COMEX gold. This is futures market. So we were actually looking for a little bit lower price to come around 2278. But with this kind of a move, it still remains a trading range, and the top of the range is around here, 2400. Looks like the market might have actually formed a double bottom around here, so at the bottom of the range. So the chances are now increasing for this market to actually go and test the top of the range, and it might actually be able to break out of it, and perhaps see a move towards 2500 to 2700, because in longer term monthly charts we have 2700 as a possible scenario which the market could reach over a period of time. So here right now it's in the middle of the training range. The lower dollar helped this market. Maybe perhaps it could move to the top of the range. Now if you look at the silver market is really interesting, because it had a move which is stronger than the move of the gold. And here, if we just draw this as a trend line, seems like we have actually broken out of this pattern formation, and this market is looking like it's poised to move higher. Top of this trading range, 3273, and even higher. So shorter term, if this move is maintained the way it is, we could be looking at just an expansion of this range at the 1.27 to 33.86 to 35.20, 35.30 is the kind of level it could in fact reach, and we could have a very nice ABCD as well. Let's take a look at that. Yeah, so there we go. We'll have a confluence of two things coming around 35.30. So that could be a pretty important target, which could be strong resistance as well. so market will pull back. But right here, right now, it looks like this market wants to move higher. Excuse me. It's supported by momentum as the price is above the 20 period moving average, just closed above it today, which is above the 89 period moving average, which is way above the 200-day period moving average. So momentum is pretty strong for this market. A very quick look at the some of the markets. So we'll just take a look at the futures market. This is the S&P 500 E-mini futures. Today, I believe the market had shorter times. So this market has gone and made a new all-time high. So the high was 55.95. Yes, it has. And on the weekly chart, let's take a quick look. It's right into this 1.618 expansion zone that we were watching for. And if we take a look at the S&P 500 cash market, so the cash market wants looks like want to go a little bit higher. We have the higher target on the weekly charts, 56.50. So that's the region looks like the market wants to move, and there is a possibility that we could be in an extended ABCD higher. So I actually might extend these ABCDs by 1.618. So we could be looking at a much higher price target as well. Now, in my opinion, we had a timing. If you recall our weekend video, if you haven't, then I suggest that you go and watch that. I'll put a link towards the end of this video for it. We are watching for a key timing to come in on the 1st of July. Now, with the timing, we have to give it 2 to 3 trading days on either side. And we were looking for the market to put in some sort of bottom, but the market was already strong, so it looks like the kind of pullback which we had finished a little bit earlier on, and now looks like the market with the anticipation of a rate cut coming in a little bit earlier in September. I think we have a pretty good chance of a very nice summer rally, which could in fact take us, from where we are now towards the end of September. And if you recall, we were looking at the summer rally scenario in which we had a analog that we were looking for lower yields, lower dollar, and we were looking for higher risky assets such as stocks. We were looking for a neutral to higher precious metals because the gold had already moved quite a lot since the month of February, middle of February 2024. And we were also looking for the commodities to be from neutral to higher, but not like mildly higher, just off the back of a lower US dollar. So the commodities have been kind of flat or moving a little bit lower, which is disinflationary. But with a lower dollar could actually boost some of the commodities, such as oil is already making a move higher, soft commodities, and if in the crops we might get a crop scare that could just momentarily drive the prices higher. So there is a possibility for that. It usually happens once or twice a year. So this is what we are looking at. It seems like the market is kind of moving in that macro scenario that we were putting together with the anticipation of the Fed actually becoming dovish and moving on with a rate cut perhaps before the elections. And this is looks like the playbook which we might be in now. So with that, just take care of yourselves. And if you like our analysis, I will look at the markets, different markets. We try to put things together because it's all a big flowchart of cash. If cash is moving out of one asset class, moving somewhere else. So we have to watch all these different markets to make an assessment where we might be in an overall macro environment, and then watch each of these individual markets as carefully as we can to make an assessment of it. And also the equity indices, the US equity indices, we need to look at all of these major ones because sometimes the money is just moving from one into another, so there's a rotation going on. The NASDAQ has been pretty strong. It has been a leader in 2024, and that is with the perspective of lower interest rates because that actually help the growth stocks. And then, of course, if there's going to be an environment where the inflation or the rate cuts might not be coming as many or as much quickly, then some rotation could happen into the stocks which pay, more dividend. So that's a discussion for another time. If you like our analysis, how we look at these markets, how we do the technical analysis, then please do subscribe to the channel. And if you found this video of educational value, then please give it a thumbs up. Speak to you guys soon and have a great holiday. And for the subscribers from United Kingdom, we have the elections coming up on 4th of July. So have a wonderful day, those of you who will be voting. Bye.